This example begins with great demonstrations of lower wick rejection at an area where a prior major upper range has switched roles to become a major support range. Then we are reminded that upward continuations are basically three methods rising price action on a larger scale. Some key features to look out for are the increased bullish price action and volume at the beginning and end of a three methods rising continuation, and a neutral to slightly bearish range in between with proportionally lower volume. The candles within these middle ranges are often fully contained within the large green real body of the first and last candle of a three methods rising pattern, and if it is a larger bullish continuation such as these cases, then the range will still be contained largely within the green real bodies of the first candles that begin the surge and end the continuation. Here's another case where the market rises quite sharply due to consistent bullish volume and candles rather than significant increases in bullish volume and large gaps up. There is some hesitation in the market due to an upwardly skewed harami that still demonstrates remaining bullish interest in the market. Currently, there is more indecisive than bearish price action due to the market remaining relatively flat, and the longer lower wicks of the past two candles demonstrates weakness when the market tries to sell lower. But there is still resistance in the lower 180s. That means it's quite normal for the market to remain flat to slightly bearish in the short term, and as long as it stays within the lower 180s and not drive lower, a possible three methods rising can begin to emerge if there is a large green candle that closes significantly higher in the near future. This does indeed happen, and with some strength, with a significant surge in volume, and provides a demonstration of a three methods rising with only two candles for the resting phase. Remember, it's just a name. On average, there are about three candles within the flat to slightly bearish range. Due to this concentration of bullish continuations, 3M stock price is able to rise quite strongly and stably. Currently, there is some bearish sentiment. These are no bearish stars, but they have slightly longer upper wicks, indicating weakness approaching 208, and when these two are combined, they form the same general outline as a hanging man candle, showing some bearish intent. In the short term, trading remains relatively flat to slightly bearish, indicating this can be another minor resting phase in a bullish continuation with that same three methods rising price action, provided that in the near future there is a strong green bullish candle closing strongly above 208. This becomes quite plausible as the market holds above the temporary 204 support boundary to avoid a downtrend, and instead continues with increasing bullish volume. It's not an exact three methods rising with one single large green candle finishing off the pattern, but the same price action is still present with this firm row of green candles closing over 208. All things come to an end, and this goes for the uptrend as well, which accelerates down with this gap to begin finding support near the beginning of the final bullish continuation. In the medium to long-term context, this turns out to be a relatively minor pullback, especially as the gap down causes a downward overextension in the short term, and this 200 boundary holds quite firmly for further bullish upside, and along the way there is that familiar three methods rising price action that occurs on a slightly larger scale. And speaking of a larger scale, looking at the longer term context, sees the market finally form a major downward reversal, and this begins to end near the major support range marked out at the beginning of the example.